One of my students asked me a very good question yesterday, and it's Marco, why is oil still elevated despite seeing news headlines about de-escalation with Iran? I'm going to explain this to you guys from a former hedge fund trader's perspective. Oil right now is not reacting off the headlines. It is simply trading supply logistics. Looking at crude oil right here, the price action tells you the real story. When the first de-escalation hit, the 10-day extension that Trump gave Iran before targeting the energy infrastructure, oil pulled back to about $84.50. Now, fast forward to this week, we've seen even further de-escalation, including a short-term ceasefire. But instead of oil going back below $84.50, it made a higher low of $91. That's a $6 to $7 premium despite improving headlines. Why? Because the supply has actually not returned yet. You cannot normalize the oil market without restoring flows through the Strait of Hormuz. That is the real bottleneck. Under normal conditions, over 100 ships pass through that strait every day, and right now it's about closer to 10 ships. Missile stopping doesn't fix that, and cooling the rhetoric doesn't fix that either. If the ships aren't moving, the supply isn't back, and the market knows that. So, what's next? I believe that oil will likely stay elevated to about $95 to $110. Because to truly remove the risk premium, you need a meaningful agreement that reopens Hormuz and brings traffic back to pre-conflict levels. That is what real de-escalation looks like. Until then, Iran holds the leverage.